Thank you very much for everybody to be here. So, as I said, I'm a lecturer in banking and finance, and it's my pleasure to chair this session together with Philip Kurtenbach and Anshul Bangawar. And I would like, first of all, to ask my nice fellows here to introduce themselves. But before, I'd like to also remind everybody following the session that to ask questions, you should go to your Brella app. You go to the bottom toolbar, click the three dots, and then you can, you have a Q&A space where you can post your questions that we are very happy to ask nice friends here. So without further ado, I would like to start the session, and I would like to ask Philip first and then Anshul later to introduce themselves, and we start with our panel. Thank you.
Hi, thanks everybody. Welcome. My name is Phil Kurtenbach. I'm currently Global Head of Wealth Structure Products for HSBC. Been with the bank for over 13 years and had a variety of roles in different markets. Spent time in digital, running the websites for Asia Pacific. Also, I've got experience in the front line and in the risk space. So, customer experience, customer retention has always been obviously a really important factor in my career. So, I'm really happy to be here.
Thank you.
Thank you so much. My name is Anshul. I guess the entire panel has a complicated surname to pronounce. But I've been working with Moksha for a few years now. Worked all the way from the SMB, the smaller wealth clients, all the way up to the largest sort of clients we have today, like the likes of Citibank and Van Lanschot. So I've through my tenure at Moksha so far, I've seen how engagement and priorities are sort of evolving, not only in the smaller sort of companies and firms, all the way up to the multinationals as well. So from a digitization technology standpoint, I've been working in the wealth space for, I think, about 2.5 years now. So
very good, very good. Thank you very much. So let's get started with our panel. So we are talking here about customer retention. So my first question to you would be, what are the most effective strategies for customer retention at the moment? So Philip, you want to?
Well, yeah, that's a big question. I think obviously the basics, right? You need a good product shelf, you need a ease of access experience, and you need to have a good brand. But I think if we dive a little bit deeper into the people, the customers, so what are they? Always think that from a personality trait, you've got a thinking and a feeling individual, and anything in between. And so in order to retain customers at a large scale, we need to cater for both of this. So from a thinking aspect, it's often more quantifiable things. That what value do you bring? What performance do your products bring? How much time can you save me? Right? Ease of access is a big piece. In terms of the feeling part of an individual, it's about what value do you bring for me? How do you understand me as an individual? So I think those two things are key for long-term retention, because it's almost easy. It's easy to get customers through the door, but it's much harder to retain them. So it's about understanding your own product shelf and understanding your clients to ensure that you give the right products through the right channels to the right customers. That would be key for kind of like a baseline retention. And then if we're real, like what underlines all of this is that you need to function, you need to work. If we look at the biggest reasons for why clients move away from a product, a brand, a company, it's not because it's a bad product or one bad RM or something like that. It's about simple processes not working. I tried to get in touch with somebody, I couldn't. I had a complaint and I didn't feel valued. So I think, again, to summarize those three aspects, you need to have the thinking part, you need to bring value to the customer. We need to understand it, which is a whole tale of things like data, how do you personalize your service, etc. Consistently make the customer feel valued, and have processes and channels that just work for each of the client types.
Good. For you?
I think Phil really talked about this one key point, which was ease of accessibility. That's growing more and more over the past years, and that's across the entire segment as well. Whether you start with the mass affluent segment, we are really seeing, the robo-advice is really on the rise, right? That's coming from the accessibility standpoint. But as your wealth sort of grows with them, and as you sort of reach the H&I sort of segment, the ability to have that human touch and human engagement, that's going to be something that's obviously going to be really key for you to be able to drive retention. But the main aspect, I think, in my opinion, that I've seen so far is you need, for customer retention to be effective, you always need to have the retention strategies focus on always on the brand itself and not always to, the specific individuals. Because as soon as, that one specific RM, for example, decides to move on, if there are not effective strategies and processes in place to let a new RM come in and, really pick up the relationship exactly where it was left off, as Philip mentioned, there's going to be a drop-off that clients are going to see and experience and feel. They're going to feel that they want value enough, and that's what's going to cause them to sort of move on to the next brand. So I think that's the key aspect, is the accessibility, and make sure you've got the human touch that the clients always, when they need it, they crave it, they have the easy ability to engage with them, and having that brand loyalty sort of tied in.
I see. Good. Is it getting tougher to retain clients?
Yes, I think so. Anshul spoke about accessibility. Everybody knows that digital channels, mobile or online, and more mobile have become key for all industries, as well as the financial industry. So with this ease of access, it makes it easier. Before 20, 30 years ago, you needed to build up a branch network, hire hundreds and hundreds of people to even start getting a foot in the market. And these days, you market your product online or an app, you get an app, or maybe you buy in a white labeled part. So yes, there's more companies out there, more specialized, nuanced companies where they really battle you not on the breadth of everything you do, but just one key aspect. And customers are more and more willing to multi-bank or use different apps for their specific use. So I think, it is getting tougher. But the one piece where I think, coming from a larger company, that we do try and drive on is exactly what you mentioned, the brand. We're not here for you just now. We're here for you always and for anything that you want. And I think that's what we're trying to drive on.
And for you?
I think in the FS space overall, as I mentioned, we're seeing this over the past years. We've seen so many new neobanks also come into place, right? Like the likes of Monzo and Starling. Initially, there wasn't really any confidence whether companies like Monzo, individuals would trust to actually have like savings accounts or have a large amount of their money in their bank accounts, in a Monzo bank account. And as we're seeing so far, it is leaning towards that direction.
Right.
So we are getting and entering into an even more competitive landscape, which is always going to keep evolving. So, as Philip always mentioned,
it is good.
It is.
Okay, so second questions for you. How important is the digital KYC, so know your customer, to investment platforms? Should it be a priority? You want to?
I think, from a digital standpoint, I think it's a no-brainer that you're going to need a KYC process has to be digital. If it is still based on, can you please still send me these, sending that over multiple different emails and all of these unstructured sort of ways of going about it, that's the very first point that you have to sort of put your reputation and your brand forward. So if at that very first point the customer is not getting a great experience just through doing the KYC process, well, that's already, you're shooting yourself in the foot right there. So that digital process is, almost a necessity. And then that always need to extend into actually understanding your client. So that KYC process not only is about gathering all that information, but it's actually knowing, what are the needs and the interests of your clients, so the RM can come in and, service them appropriately.
I totally agree. So for me, digital KYC as a basic part in an onboarding journey will become a hygiene factor. It's almost not a USP. It's not something where you can say like, oh, we can do this and this is something nobody else can do. This will become a hygiene factor, I think, or at least offering it. Also agree with it. It's more about what do you do with this information then? Because if you ask a client to more looking into the wealth space, above and beyond just the basic things of address and date of birth and passport information around what are your incomes and outgoings, what are your assets that you have, what debt do you have. It's about what do you do, how do you utilize that data to then personalize the experience for the customer, or ensuring that you don't ask these questions time and time again. So it should be, if I've digitally onboarded with you and filled all this information out, then I then either come to an RM or in any other shape or form interact with you. I don't want to be asked these questions again, and that is probably a bigger hurdle for a lot of, especially larger companies, and that will become key to utilize that information and pair it with maybe third-party information or information out of that about your customers from other channels. Pair this up to really drive your experience.
And actually, personalization is a very good point because it's bridging also. It brings me to the third question about personalization, actually, which is basically, how can firms build trust and personalization with digital investing that consumers would traditionally get by meeting banks, investment managers face to face? How do we provide that? No? What is your experience?
I think, yeah, so in terms of personalization, it has to be done digitally, and I think a large part of that is or just a starting point could be education and content itself. So it's not just about products or services. Hey, this is how you can bank with us, or these are the products that I feel you should buy, or we have on our product shelf. It is about, again, you utilize the information that you've had to personalize the experience. If I know somebody is experienced in equities but has never invested in bonds, then maybe just educating them about bonds it may be a great step for the customer and a great step forward in the relationship. But knowing that this is what they may need, and the digital use of the channels, be it website, be it email, or through the mobile app, or etc., will definitely become key. And again, the usage of the data and the information that you can draw from how did they interact with the educational content or with the product content I put in front of them to consistently and constantly optimize the experience will definitely become key.
I mean, I think Philip is already talking about a lot of things that AI is going to be essentially going to be leveraged. I'm sure it's already being leveraged now, but it's going to definitely keep evolving and leverage more and more to create that personalized products that's going to be relevant for a specific customer. And then it's the RM's job to come in. So once the AI has kind of come up with an output of what is the right product for this specific individual, or maybe a new product for them to look into, it's now really going to come into that RM to really personalize a way for them to pitch that forward. And from a digital standpoint, I think it's definitely something that's going to be, it's already possible, whether it is depending on the digital sort of solutions that a bank is implementing. When it comes to the actual sales pitch of how it's being done, I think that's when that personalization element is really going to come in. So once you submit that investment proposal, why is it the right one for me? So that's when the RM is really going to come in and step up and say about that. But if you can go a step further and actually make it asynchronous, so it doesn't have to be tied to a phone call or right. These in-person meetings anymore, that's going to make it even more convenient for that customer to bank with you.
Wow. I see. And actually, so the digital world is offering an opportunity, right? So also to meet the needs. And this brings me also to another question, which is, how can you, to what extent you can meet different needs of the customer with a hybrid journey? So parts human and part digital services offering, right? And what is the right balance of human and digital services to attract millennials audience, especially?
I mean, when it comes to the right balance, of course, it's going to depend on the exact segment that you're dealing with. We're seeing millennials actually not only in the mass affluent segment, but there are actually a lot of H&Is coming in that millennial segment itself. So we also need to look at exactly what segment it is. As you go, obviously, from mass affluent to H&Is, your automation goes down and that human touch sort of comes up. I think that's pretty much a standard that's really given.
Yeah, so I think I see the word hybrid in this part almost as there's three different aspects to it for me. So number one is a hybrid journey could be a journey that starts digitally, ends with an RM, or vice versa, right? So I think, yes, that plays a role, especially you mentioned high net worth individuals. Maybe it's like moving away from how much money you have, just the complexity of your needs. If you have more complex needs, it's harder to fulfill them digitally. So a hybrid journey where I still have the ease of starting with an app and then ending with an RM, I think that is an important one. Hybrid could be having the full process available digitally and via an RM. And it's actually for the customer, it's not a must. You have to start digital and have to end with an RM or vice versa. It's just you choose. You can start with an RM, then go think about it, do some more research online. It's important that those two interface with each other. That again, I don't have to repeat myself time and time again. It's not that the RM says, oh, sorry, I don't have access to what you put in online or the recommendation that you received online. So those two pieces are hybrid. And then it's about the hybrid approach by process, right? We're talking about overall and maybe an investment advice process, but I think overall, each process needs to be looked at individually and say, like, to what extent is a hybrid or a pure digital, pure RM journey necessary. So I think those three factors together, for me, the bottom line is it's about variety and flexibility. Each customer will be a little bit different, and the same customer may be totally comfortable with doing some investments online by themselves, but for other things want maybe a pension, want some advice, or all face-to-face. So I think it's the flexibility that we offer our customers, rather than just saying, oh, we offer a hybrid journey. It's about really the detail of it.
So it goes back to personalization in a little bit, no? What we were saying about personalization. And on the other side of the story, actually, you could also have segmentation of the banking side, right? So this is leading me to another question, which is about segmentation. So how can financial institutions segment their customer and offer different service models based on specific investment requirements? Okay, so how can you meet actually the segmentation needs of your clients? I don't know if you want to start.
Sure. Again, I think, I mean, the classic way how our financial institutions segmenting their client is by how much assets you have. That's a classic view of doing it. You could do it by risk, and am I very risk averse? That will bring a different product shelf, maybe different service in. What preference of channel do I have? I think, again, the reality is that we need to be prepared for everything. Each customer could have a difference of a channel preference or a preference in investments for different pots of money they have. I may be very risk adverse for my pension, but very adventurous with just money I have to sit there and grow, versus the money that I set aside for my child's education. So again, for me, it's about taking all of these segments, interlock them to individual. It's not an individual person maybe, but personas, right? It will come down. It's not one set of segmentation that will make a financial institution successful or non-successful. It's the ability to utilize multiple data layers and dimensions to create really effective personas. Because you mentioned the millennials. We see millennials that don't want to go digital at all. And we see all the generations, boomers that say, I want to do everything online now after COVID. It's really difficult these days to draw an easy line here. So I think, again, the ability to bring those things together and create personas that have different dimensions to it, that will become the key of how to segment your customers.
So I'm puzzled. So millennials don't want to go...
Well, no, I guess what I'm trying to say is that you have... I think there's a perception and a generalization out there that you say it's like, oh, the older the customer, the less online they want to do. But the reality is there's chunky portions in each of the generations that want to be digital and not. And yes, the average will be the older generations probably want to do. There's less people that want to do everything digital. But if to segment your customer in that way that's what I'm trying to say, by just one dimension, that will be the mistake. You need to be by multiple dimensions to create personas.
So really know your customer, right?
Yeah.
And we have also questions on that. Yeah. What's your view?
I think I totally agree with what Philip mentioned. As you mentioned, know your customers. But again, we kind of are going back to a similar theme of personalization. But at the end of the day, as Philip mentioned, even if they're sort of similar demographic, maybe they have similar interest on things, they're always going to have differences in terms of the way they want to access those services as well. So if banks especially can leverage solutions that are still familiar, to begin with, so they can still entice the customers in, and then move on to more, perhaps complicated or complex type of interfaces. That's going to be sort of bridging them into almost like a gentle push, rather than really throwing them into the deep end. No,
that's very interesting. So I think I've done with my questions, and we can start with our Q&A session. So I'm really just want to remind that to ask questions to the audience here, you can go to the Brella app. So I will start with the first one, again on KYC. So it seems to be a very big issue. So is KYC, so know your customer, a secret power to improving customer experience and standing out from the crowd? So is that the secret power? What do you think?
I can go first. I definitely agree. As I mentioned this, briefly before, when it comes to KYC, that's the very first touch point you're really going to have with your clients. So that's the first, time you can really make a strong impression with them. And if you can really understand your clients on a really personal level of what's really important to them, that's really going to allow relationship managers to go that extra mile and really differentiate themselves than potentially what other competitors are going to be able to do. So if you have a strong KYC process in place that gives the customers a great experience, but also allows them to actually divulge that information. Oftentimes if you don't ask that question, maybe you will never get the answer to it.
Yeah, totally agree. KYC is key, and just to add maybe an additional layer to it, I think it's what could become USP, or what is becoming a USP for a lot of companies out there, is how do you consistently go ahead with this? So we all onboard customers and we all ask a set of questions, and then there's this first advisory conversation. The key here will be to consistently have this dialogue and engagement with your customers to understand where they are, to understand the nuances on how opinions and situations change for our customers. And again, there for me is the approach is, number one is you have direct interactions with your customers, whether that is directly on your website, via your app, via an RM on the phone, or via your chatbot. That is key, but also I think the addition and the understanding of third-party data, understanding the holisticness of your customer and the wider picture will become key. So KYC is, rather than becoming a one-off, is becoming consistent throughout the relationship, and I think that will be key.
I see, that's interesting, because brings me to the second question that the audience is asking. So a diversity of ways to interact with the clients. So the question says, people want to engage with the wealth managers, so something specific, wealth managers, in different ways. How can, because there is an element, in wealth management there is also an element of trust, if you like. So it is particularly important, this question. So how can a firm ensure that they are meeting all types of customer expectations? So what do you think, Philip?
I mean, if we specifically talk about ways how to interact with your wealth manager, I think, COVID has shown us, I mean, a digital way, right? So I think it's becoming key. I think also for looking at the different types of questions for everyday, I think it's important for everyday questions to have channels such as a chatbot or a team to answer some basic questions. But for wealth manager, absolutely, and we see more and more companies even going things like WhatsApp or texting, because customers feel it's not about having an hour-long conversation and that then being able to do via Teams or Zoom or something. It's about having a quick response via text message, maybe even. So I think those will all become key. It's like, I've seen this recommendation that you sent through. Can we quickly do this? Right? So things like that, I think, will become. It's about it. Instant response is becoming more and more important for people.
So you're saying, now, if I get it right, you are saying that actually technology there is a means rather than a solution. So it's the dematerialization of physically interacting with a person, but you always have a person behind technology, right? Or you might have a person.
Yeah, I wouldn't go as far as say always, because again, that depends on the customer. But absolutely, for anybody who wants to interact with a wealth manager, digital channels will
I totally agree. What about you?
I think the devil is in the detail. So, social channels like WhatsApp and, Telegram and all these, solutions, customers go there because at the end of the day, it's just a more convenient way. And the challenge that the bank has is not actually the fact that the customer is using WhatsApp. It's the fact that they have no oversight in terms of what's actually being discussed on WhatsApp with their relationship managers. And if they, as I mentioned, if they have no oversight, they can't take appropriate actions. So if banks can, bring that into them. So if they can have WhatsApp-initiated conversations from clients, but they're still auditable, and use ways for you to do that. And essentially, even from a client standpoint, they're going to feel secure to have some conversations on WhatsApp. But especially when large transactions are involved, they have to go through an authenticated sort of approach. So this kind of gives banks an opportunity to open up these different channels anyway. So where a client can start a conversation on WhatsApp, but if it actually gets, requires sensitive information or requires a transaction or approval, well, the RM can easily push them to, can go ahead into for example, maybe the HSBC app, log in, and we can continue that conversation there. And they can even go a step further. You can also have, we've seen instances where banks actually have an unauthenticated chatting system, so they can still open the app, but they don't actually have to authenticate themselves, and they can have some layer of conversation to emulate a WhatsApp-like experience, and then again transition into an authenticated environment for you to have that secure channel. So there's a lot of opportunities out there to meet the customers where they are, of course, depending on the region and what the needs are.
That's extremely interesting. And actually, we have another question which touches on an interesting and important point. Vulnerable clients, right? So how does the customer experience change for vulnerable clients? Would you like to go first?
I think probably need to better understand in terms of what they exactly mean by vulnerable clients, but at least the take I'm taking to this specific question are the ones perhaps like in volatile markets perhaps, where they don't have access to the very basic needs or technologies and those kind of things. So I think it really comes up to expanding, a bank sort of horizon, and I think there's a lot of governmental play that comes into it as well.
Yeah, I think you said the right thing. Vulnerable customer can be,
Yeah.
it's a variety, right? Is it a recent bereavement? Is it just a learning disability or language barriers that make them vulnerable of understanding what you told them? So I think that's why maybe shifting it, what is important around vulnerable customers for me, number one is have journeys that cater to them, right? So again, if you were to force everybody to just go online and you have massive documents with lots of stuff to read, that doesn't cater the journey. So you need to have channels available and means available for them to bank with you or to get advice from you. One of the aspects there is also how do you identify vulnerable customers when you don't sit in front of an RM? And I think that's where a key part is for any institution that deals with customers, even outside of banking, is how do you identify? Because before it was easier. You have an RM that knows the customer for 20 years. They understand, they know what's going on in their life. They know at what period of their life they may be vulnerable and which ones they're not, or whether the customer, for one reason or another, is vulnerable permanently. That is digital. That's tougher digitally, right? If you have a complete digital onboarding where customers kick out the questions. So I don't have a solution, to be really honest. So apologies, I don't have a solution for this. But I think this is an interesting aspect and something where companies have to take responsibilities to explore how can this be done. But I'm probably the wrong person to do it. It's about, I guess, the type of questions you ask, the type of answers. You look at linguistics and behavioral patterns, but I think that is definitely an area to explore.
Perhaps how they can potentially actually even interact with the bank as well. So, are they even catering for someone who cannot see, for example? I think accessibility in that regard is also something that's key. I've seen in my personal experience that accessibility has been a key requirement for one of our own banking implementation as well. So there are banks out there who are taking active steps towards, again, not only increasing the addressable market, but trying to cater for vulnerability. But, again, hard to answer that question specifically.
Okay, so apparently though, the first step would be offering an hybrid journey, just to come back to what we were saying, right? So that is the very first step. You cater for different ways of engaging with the bank, and then at least those who self-assess as vulnerable can have different journeys with the bank. Good, very good. So another question. So what impact will tighter client segmentation have on costs, if any, in the future? So a tighter segmentation, what is the impact on costs? Tighter
segmentation, impact on cost. That's a good question. Well, you would hope that kind of your analytics tools, AI, etc., takes a lot of that back. So implementation and development is a cost, but I would expect that whilst there is a one-off cost, that it wouldn't necessarily add a consistent or permanent higher layer of cost in there due to the right usage of data, of analytics and AI.
I would perhaps think it would actually have a positive impact on the revenue itself through tighter segmentation. Of course, if being implemented appropriately and you can leverage that data well, it really should translate to the bank obviously making more revenues to increase in number of transactions purely because they know exactly what the client's needs and demands are.
Okay. Yeah, actually, I agree with you. I mean, they might balance out, but it depends, actually. So what impact, what level of customer churn should be acceptable in wealth management?
That's a tough question.
Let's try to address it in a general way. Would you like to go first?
Yeah, I can try. That was a big one. So in terms of level of churn, I think it's going to be hard to put an exact number on it. Obviously, it depends on how big the company is, how new is it, how much of an established market that they're already playing in.
Yeah.
So I'm not gonna put an exact number to it, but I think what I would probably do is understand why is it that the customer is churning. I think there's some reasons that if a customer's churn is happening for these reasons, I think that really should be something that's addressed, as soon as possible. And some of these reasons might be purely just a lack of, good customer care. I think if you're able to sign up a lot of customers, but you're not even able to provide them great care, I think that's something that's right off the bat should be addressed as soon as possible. And then the second element, I think we've touched on this as well, is if we get repeated sort of feedback from your customers that you're not actually hearing me, I think it's again coming down to that personalization, saying how can I actually get in touch with you easily, accessibility, those kind of things, which really there are solutions out there in the market for, whether you decide to do it yourself and implement it yourselves or go and outsource the implementation. So in my opinion, if you have customers churning for easily solvable problems, that's something that really needs to be addressed as soon as possible.
Yeah, I agree. I don't think I can put a number on it. There's two individuals. You'll have natural attrition of customers, right? They say that's normal. They move away. They for whatever reasons, right? But it's about the reasons, right? It's about whatever your number is,
right?
It should be lower. I guess that's a fun point.
That's a good way of putting
it. But it's like whatever your number is, you should always strive. I mean, obviously, in an ideal world, what do I want? Zero. Right? I want no customer to leave. I want only growing. But that's not realistic. But I think it's not about is 10%, is 15%, is 5%. Right. It's about whatever the number is now, understand why and drive it down. That's probably more the point. And again, then it becomes really the tree becomes throughout. And we spoke about this, and I think that's where a lot of the pieces come together. It's the consistent customer contact should enable you to understand the reasons why they're leaving, if they're leaving, and in what situations they're leaving, and then address these, and then monitor. Again, it's if you take a digital experience, right? That's what the classic digital companies are so good at, right? They consistently monitor every single step of a journey within an application, on which page, on which field do the most customers drop off. Let's reword that. So I think the point is the mindset needs to be constant and consistent optimization of whatever processes, whatever advice you give, whatever the product is that you're promoting, and that really should then help drive the rates down.
Sorry, just one important point probably to address is the biggest sort of flight risk that should be catered to is an RM leaving should not be the cause of your customers leaving. I think that's a really critical point that we've seen sort of firms, no matter what size they are, that's something they really are challenged with. So being able to build in effective processes to minimize the fact that if RM leaves, they might take some clients with them. I think that's going to be really key.
Right, but I think we can all agree that number, whatever number that is becoming more and more important in the strategy of the banking system.
100%, and it's always what is it? Marketing 101, right? Onboarding, exactly. Winning a customer is more expensive than keeping them. So absolutely.
Yeah, but still, I believe. But you tell me your view that it is becoming more and more important in the last few years or so, right? So you are looking at that with a particular attention, I believe. But you tell me, no?
Yeah, for sure.
Okay, so another question about long-term retention or engagement of the client. Do you think that it is better for the long-term engagements going for regular, quick engagements, or maybe lengthy biannual meetings? So what is the best way?
I think you can't really pick between one or the other. I think it has to be somewhat in the middle. I think the periodic, regular sort of engagement, if they are coming in with content to actually discuss and not just a formality, that's the key. Of course, you need to be able to build a strong, familiar and friendly relationship with your with your clients. So that's going to be require some form of periodic contact. And when it comes to these annual reviews, I think they have a different purpose altogether. It is to make sure that the objectives and targets set by the customers at the very beginning are being met and at least tracking into the right direction. So I think there's a place for both. It's just a matter of based on the individual customer, how often do you connect with them?
I totally agree. I think your skeleton has to be in the wealth advice space, has to be we're having deeper conversation. I can't. And again, that doesn't even matter whether they're digital or whether they're face to face or via Zoom or something. You need to ensure that you still understand your customer and that the strategy that you and your customer together have chosen for their wealth is still applicable. And throughout there, it's constant contact, right? I'm not speaking about spamming them with a push notification every day, but it's about ensuring that by understanding your customer that you consistently provide value to them. And again, that's not about products, it's not about sales, it's about educating them, taking them along on the journeys, updating them about it. I don't need an hour and a half conversation, just give you a quick snapshot of what's happened to your portfolio in the last month, or whether there's some new exciting developments within your portfolio or things like that. Or if I know that you're interested in something like sustainable investments, and it's constantly new information out there right now to provide you with a steady stream of information. Because again, linking it back to retention, if I don't constantly feel valued and personalized by your company, it's a higher risk that I'm going to leave you. So I think that's key. So it's both.
I think another point is potentially also to start thinking was multi-generational, retention as well. Just before this panel discussion started, Philip was talking about how HSBC is working on creating working on fairy tales for financial sort of education of kids. Being able to drive that type of engagement, potentially even with the younger generation, to build that relationship and addressing, what their how do they want to engage? Again, if it is. Maybe it is digital, but maybe it is just like you just want to see them face to face. Maybe it's once a month for dinner. I think being able to address that the entire sort of family's needs, not just the direct point of contact, that's really going to help any firm, for example, to sort of build their client portfolio and retain them.
It is fascinating how, at the end of the day, even in this area of digitalization and innovation, if you like, it all comes down at the end to know your customer and relationship management, which is actually what has always been there. Yeah, exactly, for you. I think we will take the last question, because unfortunately we are going to the end of the session, but I'll pick up on the new generations. And the last question we are going to answer to is the following: how do we attract and retain clients to traditional lower returning asset types, when the younger generation will be seeing the rise of digital assets with huge returns? So the competition with digital assets,
So first, I think the attraction of younger customers starts, as you mentioned, with education. I think that's something where in most countries around the world, where the school system still has a little bit of a blind spot, where really do we teach our children properly through the general education of how to budget, what money is, how does it all work? I think that's it. The competition with digital assets, of course, I mean, it's the returns have been mind-boggling at times, but it's about understanding. Change the question even to younger customers or customers who are heavy in digital asset. Is that where you want to put your pension? Let's start with the key pillars of your life. Is if you were to save money for a wedding in 3 years' time, would you put your money on Bitcoin? And maybe somebody will say, like, absolutely. But I think you will see a growing part of it is that digital assets may play a part in a lot of investors' lives today, and maybe it will even grow in the future. Right? But the reality is that I don't necessarily see the core financial planning capabilities being shattered by digital assets, because how do you advise on digital assets? Like what is it? Is there a buy recommendation? It's still quite far away from the traditional financial assets, and maybe that will change in the future. But I think right now, to focus on what is important in our customers' lives and to cater for that and understand what they need and value is gonna drive your success. And if the customer at the end of the day makes the decision themselves to use part of their wealth to put it on this big question mark that digital assets are, then that's their right to do so.
Yeah. What's your view?
I mean, at the end of the day, as Philip mentioned, it's all about risk appetite and risk education, right? So if the question is specifically for millennials in terms of how they can, compete potentially with digital assets, well, I think it all comes down to the point of like hedging your investments. So if it is that they feel that digital currencies or Bitcoin or NFTs, all these recent sort of digital commodities, essentially that they feel pretty strongly about, I think, as Philip mentioned, it's of course their prerogative to go ahead and invest some of their wealth into those assets. But then it comes back down to the basic investment philosophies, which is hedging your investments. And when it comes to hedging, you're going to have to stick with the known financial products, which are going to be the ETFs, the commodities like gold and silver, which have been, the hedges for several years now and decades.
Yeah, so actually, we have time for the second part of the question actually, which is like that, and how do we pivot risk models AML in the digital asset space?
Oh, that's a completely different. So
yeah, that's why I left it.
AML part on digital assets.
Yeah.
This is a very difficult one. Obviously, there is AML concerns about the use of digital assets that you can't track and trace them. There's little KYC in that space. I guess in order to, and we've seen that coming up more and more, right? If you want to give customers if the ability to invest in digital currencies, there's ETFs out there right now already, right? So I think that's a way how you can alleviate AML concerns for now. But again, I'm not a blockchain or digital currencies expert to say it's like this is the programming, this is how you could solve it kind of digitally or through any tools that you could build. But it is the industry itself can utilize their known asset class or their known vehicles such as funds and ETFs, etc., to enable customers to invest in new types of asset classes. And then it becomes, as long as you trust the fund house that they don't money launder with the Bitcoin or the Ethereum that they're holding, then that is a lower risk than holding the assets themselves. So, yeah.
I think the first thing I need to do is preface by saying that this is not my domain of expertise at all. Yeah. But I think essentially just echoing everything that Philip has said, which is, right now there's just not a sophisticated systems in place, whether that's governmental or maybe even a technological system that's mature enough for them to have, strong AML capabilities right from the get-go. So as you mentioned, if there are more sophisticated products which allow, like ETFs, which allow for investments into these digital products, and maybe that's going to be the way forward, at least for the short term.
So on the end of the day, it is on your radar, right? So you are kind of managing that.
Exactly.
Okay. Thank you very much to both of you. It has been extremely interesting. It could have been go on forever, but I think we will wrap up the session. Thank you all the audience to be here with us, and enjoy the rest of the conference. Thank you.
Thank you.